you could mine it. And so Hashcash became part of the design ideas like B-Money and BitGold in 1998, so a year later, and Hal Finney's RPow in 2004, and then of course Bitcoin starting in 2008 when Satoshi started emailing.
In the past day, Bitcoin has surged above $115,000, rekindling cryptocurrency fervor as Apple's astounding $100 billion U.S. investment commitment rocked markets. The cryptocurrency market jumped in tandem with Wall Street's scream and the onset of risk-on fever. However, a significant resistance wall at $117,000 and a major pressure point are now in the way of Bitcoin's rise. Bitcoin dropped below $113,000 just a few days ago. However, that just caused a seismic shift. Overnight, fear gave way to greed, pumping out close to $170 million in short bets. The bears were steamrolled in addition to bleeding. In the meantime, more than 56% of the top margin traders on Binance remained resolutely optimistic. But there are risks associated with the exhilarating trip. On August 7th, a fresh round of tariffs on Southeast Asian Bitcoin mining equipment goes into effect, endangering the supply chain and putting more strain on the existing momentum. Bitcoin's path, however, might not be merely another market rebound. It might mark the start of something far bigger. Adam Batch, a cryptographer and CEO of Blockstream, thinks Bitcoin is coming to destroy everything, not merely knock on gold's door. He highlights the ridiculousness of inflated equities, overpriced bonds, empty flats, and hollow assets that are all swollen with monetary premium, a brittle layer of trust that Bitcoin is ready to absorb. Back aims for an incredible $200 trillion. Rather than the $14 trillion maximum on gold, adoption isn't the only issue here. It's about Bitcoin taking the place of actual trust. The revolution in money has started. To learn more, let's check additional snippets from Adam Batch's shocking interview. Remember to enable notifications, like, and subscribe for more in-depth material. Thank you for coming back. Watch the remainder of the video.
I don't know about that, but it was a certainly interesting experience and ride getting kind of instant fame in Bitcoin relatively early on because of the Hashcash connection. And I was somebody that was interested in and implemented some of the previous more centralized electronic cash systems. So certainly, became very interested in Bitcoin as well. So I get a lot of emails every month or two from people using some of the open source code I've implemented or using some kind of applied paper, and Hashcash was one of those. And so, it felt like another one of those. I thought Satoshi Nakamoto is the real guy's name, developer or researcher. And but I was involved in the attempts to build an electronic cash system after DigiCash, the previous system, had failed. And the reason it failed wasn't technological exactly, but it was because it was centralized. And this central database allowed you to verify that the coins were valid. And the company failed. So then the coins you might have became unspendable. And so, the people that were interested in electronic cash on the cypherpunks list, the way they reacted to that is to draw lessons that, electronic cash is very cool. We want to see it come back. We need to solve the decentralization problem. It's centralized, it failed, so we need a decentralized solution. That's very technically challenging. Right, it was a kind of postage stamp. Now, that was in the context of the DigiCash system, which had recently failed at that time. And so, the obvious thing for the anti-spam problem in a remailer context where you don't know who's sending it would be to use the electronic cash system. But given that the candidate then had failed and there was no clear technology solution to implement a decentralized one, I tried to solve a simpler problem, which became the postage stamp. But interestingly, within a day of posting that, multiple people independently observed its potential use to solve one of the problems of a decentralized system, which is how do you get money into it? So it brought in the concept immediately that, you could mine it. And so Hashcash became part of the design ideas like B-Money and BitGold in 1998, so a year later, and Hal Finney's RPow in 2004, and then of course Bitcoin starting in 2008 when Satoshi started emailing people. Yeah, I think what you've seen from human history is that money evolves as sort of a natural phenomena because people want to exchange. So they can exchange in terms of IOUs, like you provided me with some bread, I owe you for that. I'm producing something else, I'll provide it later, but that's inefficient. So what tends to happen is people settle on a standard good that's scarce, and that's evolved over time. Seashells, then gold, and now Bitcoin. I guess it's the new improved monetary technology. So I think people look for whatever is relatively scarce in the environment, the best candidate, and they use it. They end up using it for that purpose. So on this hypothetical island, that would be what, maybe it would be some hard to find seashells that you have to spend a lot of time looking for, or some commodity like a gold ore or something like that. And so I think Bitcoin is really a gold, a digital solution to that. So actually a better hard money. Yeah, I mean, it's an interesting question because some parts of Bitcoin look like they could have had alternative parameters and still probably worked. And so, you could certainly see a graduate, like a smooth slope of supply rather than one that's stepping every 4 years with half the supply and half the fresh supply. And so I think coincidentally, it seems that the halving cycle is a kind of heartbeat for the Bitcoin economy and market. It does seem to continue to affect the market cycle, even as it represents a smaller proportion of the coins in circulation. Now there are almost 20 million. And so the drop from, 6.25 to 3 1/8 is a smaller drop. So I think how that comes to still be economically significant is over time people learn to hold coins and not trade them. And so the coins that are left that can be reached in the market are shrinking as in line with the rate of supply is also shrinking. So they stay roughly in line, and that's how you can have this counterintuitive phenomena that something which is a smaller and smaller percentage versus supply still have a very noticeable effect on the market every halving. So I think it could have presumably worked without the halving, but the halving is a nice kind of economic cycle driver, it turns out.
Money is dynamic. From seashells to gold and now to digital scarcity, it changes over time. People are drawn to things that are most valuable by nature. Bitcoin is not merely another kind of money. The reaction is a reaction to centuries of inefficiency. Its cycle subtly influences market cycles, functioning as an economic pulse. However, many people continue to ignore the signal despite expected supply shocks. The future of global value storage is already being led by those who are paying attention, while the majority are kept out of the spotlight by volatility, confusion, and mainstream noise. Bitcoin is subtly making its way into conventional finance. It's no longer only a rebel asset since ETFs make access simple and institutions want exposure. It is integrating with the system. However, the true change is more profound. It's becoming into an online marketplace for assets rather than just money, thanks to tokenized shares and 247 markets pegged in Bitcoin. While established markets are struggling, Bitcoin isn't coming to knock. Before most people even notice it, it is changing the financial landscape by infiltrating via the wires. Let's view other excerpts from his interview.
Well, I think, I was, because I was familiar with the previous systems, while they were centralized, the academic cryptographers had tried to arrive at the idealized or perfect characteristics for an electronic cash system. And of course, the technology wouldn't necessarily be quite able to meet that, but they were able to have extremely strong confidentiality and privacy of who was transacting with who. So it's really a bearer money with cryptographic assurance. And it turns out with a distributed system that cryptography doesn't work. And so, there are still ways to make it work, but they're far more complicated and less efficient. And so Bitcoin doesn't, out of the gate use those. And so, I would view the fact that Bitcoin doesn't bring those properties in its initial launch really a technological limitation and not, a design intention. But, that's speculation because Satoshi didn't explain. But I think, you can see that even in the Bitcoin paper, it's talking about, transacting without a middleman and bearer kind of cash-like properties, right? Which are actually better insured by these cryptographic mechanisms. It's just that they are, they're harder and they're still not, probably quite at the stage you'd want to deploy them on Bitcoin, which has a lot of value on them. Well, I think what tends to happen is that the features that, become available technologically get added to Bitcoin, either directly in the base layer or in layer twos, where there are trade-offs that don't quite make sense for the base layer. So, I think Bitcoin is, increasing market share. The new money coming in, via the ETFs are kind of the top 10% in terms of share portfolio minus the top 1%. So just, people with a portfolio that talk to their broker. So I think they're reallocating shares or gold ETFs into Bitcoin. All that money is going into Bitcoin, not into the other coins. And, the institutions have professional managers and they are focused on Bitcoin as well. So I think it's been, a market cycle that has seen Bitcoin rise while the rest of the assets have shrunk in market share, actually. Well, I've been curious over time how he arrived at the solution because, people had been trying to find a way to make this work in 1997, 1998 already, right? And so there's a sort of technological leap between the proof of work and the scarcity and how to have the system work without any identity, just that you work. So, we understand how Bitcoin works, but it's kind of a curiosity for me how he arrived at that idea, because a lot of people tried to find a solution and didn't. So that's one thing. I think there's some other curiosities like why 21 million? Why not 42 or 10 million?
Oh, that's a good question.
Yeah, and no, I don't think there was really that much he could have done in terms of adding privacy technology into it. I did notice when first looking at Bitcoin that there was a potential solution in this 1999 paper called Auditable Electronic Cash that was actually compatible with a decentralized system. But the coins will be quite big. And it's kind of more esoteric. So maybe he didn't know about that solution. But I think it's been going very well since. And, with the evolution of layer 2s and the continued gradual, careful evolution of layer 1 to sort of add flexibility to develop more types of layer 2s, things are going as well as anybody could expect, I think, better even, right? I thought that was his name, right? So,
fair enough.
Yeah, I mean, of course, it is a curiosity as to who Satoshi might be. It's a kind of mystery that is, behind the currency. But no, I don't know. It's like all of the ones that have been put forward seem to have some flaw where it's not quite believable. And so, of course, I know a number of people that were interested in this area, like developers and so on, but it seems like nobody seems to know who it is. And of course, there were people back in the mid-90s interested in privacy technology and electronic cash who are posting technical comments on a cypherpunks cryptography list using remailers. So already there were anonymous participants. So there's some kind of precedent for that kind of way to engage. But in any case, I think it's convenient and actually valuable for Bitcoin that we don't know who the founder is, because a lot of mainstream media tends to look for, the CEO or the leader and have the impression that if they could just persuade that person that they could change the system to benefit their business or something like that. So now the fact that there's nobody to identify and that Bitcoin is, decentralized, chaotic, there's no individual, you can't talk to the miners, you can't talk to the developers, you can't talk to the companies, none of them can make a change. It's really a free market type of situation where the market decides how it evolves. So I think it's convenient that we don't know who Satoshi is actually. That's one of the theories. I think the code probably is relatively uniform and people tend to have there might be some kind of indications it was written by multiple people, different styles in different area or something. So my guess is it's one person, and also, if there's a lot of people, it's hard to keep a secret. If one person can control information more carefully.
Theory.
Well, the proof of work mechanism is quite robust in the sense that it's using hash functions, and hash functions historically have suffered from mathematical degradations in their security properties. And then people used to use MD5. Then there were some problems discovered in it. Applications and internet protocols switched to SHA-1, and now we're using SHA-2. Now, it's interesting to see that SHA-1, even though it had some minor problems, would still be fine for Bitcoin mining. And the reason is that if there's a small advantage, say it becomes 2 times as easy to mine, the difficulty just doubles. And so you've got this kind of graceful degradation phenomena. And it seems like relatively unlikely based on what's happened with previous hash function failures between MD4, MD5, SHA-1. So the history of how they have slipped on their security properties is generally gradual. So I think that it's hard to envisage the proof of work part like fundamentally breaking. I think and you can always, in a worst case, switch to a newer hash function or something. There are some newer ones now, SHA-3, for example. But I think the sort of mathematical risk is perhaps more on the digital signatures or the quantum risk, which people like to talk about. But I think even there are, newer signature schemes which are secure even with quantum computers. And in my view, quantum computers are still a few decades away. They're quite early in their sort of fundamentals research. So I think, you could make an analog between current CPUs and GPUs with, tens of billions of transistors and a very early experiments with digital circuits using, cathode ray tubes, like a table with, a number of transistor-like electronics, right? So it's really very, very early days because, the quantum computers, the state of the art is to factorize the number 21, i.e. like what you would learn in primary school, that 3 times 7 is 21. That's the state of the art of what they can factorize. And even there, they had to cheat and not have any error correction. So the way that they sort of simulated that is they repeat the calculation 64,000 times and then see what the average, the most probable answer is. Whereas in a real factorization, you need to have the error correction as part of the system, not by repeating it, because it's already a lot of work without repetition.
There is more to Bitcoin's recent price decline below the $114.6000 $6,000 resistance than meets the eye. It reflects the larger shift away from retail enthusiasm and toward institutional calculation. This level has become a battleground where short-term sentiment collides with long-term structural change due to thick sell walls and overhanging liquidity. The resistance zone between $114.6000 $6,000 and $116.500 has held firm despite bullish momentum attempting to develop from $112.200, underscoring the market's hesitancy in the face of uncertainty. This impasse occurs at a critical juncture in the development of Bitcoin. In line with Adam Batch's recent observations, he explained how trustworthy custodians and ETFs enable the gradual but unavoidable onboarding of institutional participants. Retail flippers seeking a fast pump are not these people. They are deliberate actors who adhere to long-term risk allocation, procedural, and regulatory models. As they enter the market, we're seeing Bitcoin start to actively engage with conventional banking as a foundation for contemporary capital storage and transmission, rather than only as a speculative asset. Under $115,000, the price activity reflects that tension. Although a bullish basis is developing, the buy-side pressure isn't yet too strong because the capital that will ultimately lead Bitcoin to rise isn't hurrying. It is getting ready. These annoying resistance rejections can persist until that capital fully activates. However, there is a quiet change going on beneath the turbulence. The goal of Bitcoin is more than just a breakout. It is preparing to reshape the global financial system. Furthermore, enthusiasm won't be driving the charge when it eventually breaks through this ceiling. It will be faith. As we come to a close, how would you define complete Bitcoin adoption? Store of value, usefulness, or both? Please share your opinions in the comments section below. Please use the like button and share this video. Thank you for viewing, and please remember to subscribe.